the future infrastructure of AI is going to be our crypto. So to me, it makes perfect sense that we're just working our way through, and I think this is just a matter of months. And if you don't think this is possible, look at the relationship between Ethereum and its software. They moved together in sync for a long time, and now we see a divergence where the software stocks have gone parabolic, and I think it's now just going to be, again, just a matter of weeks before Ethereum prices reflect this.
If crypto's future is so bright, why have prices struggled? Lee believes the answer lies in how markets price innovation. Historically, new technological revolutions move through stages. The first beneficiaries of the AI boom were semiconductor companies. Investors rushed into chipmakers because AI models require enormous computing power. The second wave involved memory and hardware suppliers. The third wave is now reaching software companies as AI-powered applications become mainstream. According to Lee, crypto represents the next phase of this investment cycle. The market is only beginning to recognize that blockchain networks may become critical infrastructure for AI itself. He points to Ethereum as a prime example. For years, Ethereum and software stocks moved in similar directions. Recently, however, software stocks have surged while Ethereum has lagged behind. Lee believes this divergence won't last forever. If blockchain becomes a key infrastructure layer for AI applications, Ethereum could eventually catch up to the gains already seen in other parts of the technology sector.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
These are the tailwinds for crypto, but of course you're still going to wonder why crypto is so weak. And I think it's because people are forgetting that crypto is the future of money. Okay, the first thing I want to cover is agentic in robotics and why crypto will play a role. This is a list of all the milestones since ChatGPT was introduced in 2023. Okay, and there's been significant advances in the last 3 years. Of course, the first was the launch in ChatGPT. The second, which happened in 2024, was when the agent systems began to develop capabilities to work with websites, interact with websites. Then the third big advancement has been robotics. Optimus Prime and their dexterity, and of course the new Crave building drones at industrial scale. And then finally, we're seeing superhuman capabilities develop. So OpenAI developed a solve an 80-year-old puzzle, and then Vigor AI launched a robot that actually builds and operates at scale in a warehouse. Okay, so that means the future robots are already going to dominate most traffic on the internet. And this is why Mark Andreessen and others have talked about this as being a reunification, because if you got a robot system, you're going to have to control them. And that's where blockchain is much more effective than traditional rails and controlling what robots do. I mean, to give an example, whether it's authentication or identity or payment speed, all of these work better on crypto systems. And you're going to ask yourself, well, why hasn't this reflected in crypto prices? That's because the stock market is still working its way downstream. The first group that really benefited from the AI ecosystem was the semis. They're still going up. And then last year was memory stocks, and they're still in the process of re-rating. But as you can see, the market's starting to now see the AI benefit to the max, and it's working its way to software. People thought software was you lose with AI, but you can see this little parabolic spike. Software companies are benefiting from AI because they're developing the downstream applications. And finally, the future infrastructure of AI is going to be our crypto. So to me, it makes perfect sense that we're just working our way through, and I think this is just a matter of months. And if you don't think this is possible, look at the relationship between Ethereum and its software. They moved together in sync for a long time, and now we see a divergence where the software stocks have gone parabolic, and I think it's now just going to be, again, just a matter of weeks before Ethereum prices reflect this. The second story is tokenization. I've talked about this before, so I'm going to go through this very quickly. But we know that Wall Street wants to tokenize, and also they believe the future of money is compute. In fact, it's many tech founders see this, and part of it is that we're already seeing the future. There's more stablecoin transaction volume than Visa today. And in the future, there's the belief that you have as much as $300 trillion tokenized in securities markets. And that's going to be tokenizing real estate, fixed income, equities, derivatives, land, and gold. And you can see the tokenized market today is absolutely tiny right here. Okay, so it's 300 trillion. How does this value crypto or benefit crypto? Keep in mind, crypto prices and the amount of assets tokenized are highly linked. So if a market is going to go to 300 trillion of asset value, Ethereum isn't going to stay at $200 billion total network value. And that's the reality, is that there's a few blockchains today that operate at scale. Okay. So what does this mean? Well, I think that means that crypto, which delivers a lot of efficiency, are going to replace a lot of the most profitable links today. So why don't we give you some examples? JP Morgan is the most profitable bank in the world, and they earn 60 billion. But there's a company that called Jane Street. I don't know if there's anybody from Jane Street here, but they are just in the business of basically moving money around. And they're going to earn 40 billion this year. That's nearly as much money as JP Morgan. But they only have 3,000 employees. So with 1,000th the number of employees, they're almost as profitable as JP Morgan. Okay? And it shouldn't you, just moving money around is more valuable than keeping people's money. And crypto is very good at moving money around. And take a company like Tether. Tether probably gonna earn 15 billion this year. It's a crypto native company, and they have 300 employees. If you quite Tether with Jane Street, you make more money than JP Morgan, and JP Morgan is the largest bank in the world. So you get the picture. Investors always give too much value to the incumbent. And I've highlighted this before. Whether in the auto industry, you might have bet on those horse buggy makers, or in digital media, you would have bet on used corporate Viacom. But as you can see, the new entrant is always the one that captures all the value. And so I think in the next 10 years, 5 of the 10 largest financial institutions will be crypto-native companies. All right, so that gets me to the third point, which is the other thing that we have to keep in mind is these smart contract platforms are probably have become monetary units of value because it's going to be easier to hold Ethereum, arguably, to a transaction than it is to hold dollars. And Elon Musk said us, he says in the future, we're not going to use dollars as a currency. It's just going to be compute and energy. And Standard Chartered, for instance, had a recent report this week about Ethereum. And they made an analogy to Amazon, where there's a lot of tailwinds developing Ethereum, just like it was like in the Amazon. But the Amazon stock price stuck at $6. And as you know, today Amazon is more than 1,000x for error. So I think one thing to watch, of course, on this is just the Ethereum to Bitcoin ratio. Now, I'm going to jump through this really quick because I want to cover some other things, but if our view is correct that Ethereum is going to break out of this consolidation, and the consolidation breakout is tokenization and AI, I think that that's probably 50x or so the significant upside for Ethereum. And finally, I want to talk about foundations, because in this world, a foundation isn't going to be the right point of centralization for a cryptocurrency. Okay, Vitalik wrote about this year. He says that the Ethereum Foundation is basically going to slit its role, that it's not going to be the entire centralized repository for all things Ethereum. And it makes sense because the Ethereum Foundation doesn't hold as much Ethereum as it used to. It used to hold 17% of the supply, And by 2020, you would see that number drop to 1%. Last year, when Bitcoin started its treasury business, that number dropped to 0.3. And today, Ethereum Foundation only owns 100,000 ETH, or 0.1% of the supply cap. That's not a lot of Ethereum. That's about $200 million worth. And if you had to live off the typical sort of foundation model of 5% of return, they can only support about $10 million of grant efforts. But this is where the treasuries come in. The treasuries, which I'm talking about the Ethereum treasuries, and there's in my sharply among others, now own 7% of the Ethereum supply. If you're an accountant, you know what a treasury stock is. Treasury stock is essentially supply currently taken out from the ecosystem, but we also own the yield. Now the yield is around 3%, so today these public treasuries are generating $500 million a year in rewards, and that is what we can use to fund and run through the crypto ecosystem. Bitcoin, by the way, is 4.5% of that total, or 65% are basically all treasury holdings. Okay, well, this is where the plan's going to come together. Because pre-2024, before we had a friendly White House, foundations served important roles. They were funding public goods. They provided a lot of legal and operational infrastructure. They, of course, coordinated the ecosystem. They protected neutrality. And they were trying to bootstrap adoption. Okay? I mean, these are really important functions. But that made sense when we were in a DeFi world. I think now we're 2026. And in this world, a foundation role has to evolve. And I'll explain in a couple of weeks. But first, they still want to steward long-term research, right? Quantum resistance, privacy, how to make this blockchain relevant. They want to coordinate private sector efforts. That's really important. Want to develop standards and best practices. I believe they're going to have a public role in terms of representing the ecosystem. But they want to strengthen decentralization. So why do we think this is necessary? Well, Ethereum's a 240 billion network value entity. It's been operating for 11 years, never a single day of downtime. There's 11,500 nodes, okay? And this is in 89 different countries. And there's 15,000 developers. I think this is too big to be coordinated by a single foundation. In fact, I did a lot of research. I said, okay, well, what are other industries have broad ecosystems and how do they coordinate? And I've got 3 examples here. In the mobile industry, which I think is the closest analogy to what happened in crypto, there's something called the CTIA. Now that was established in 1982, has 1,000 members today, and they operate and develop all the standards around mobile. But everybody who actually is in the mobile business, who runs their own business, it's a really important center point for coordination. For the semi-industry, which of course is super relevant today because in AI, they have the Semiconductor Industry Association and the World Semiconductor Council. And again, it's a centralized foundation, but it has a very limited role. And the third is the National Association of Broadcasters, which again, in the earliest days, they're the ones that had to create the broadcast industry. That was started in 1923. Today, of course, broadcast has its own enriched ecosystem, but these guys were the ones creating it in the beginning. So, when I look at Ethereum, I think there's already the skeletons of that here. These are some examples of private companies that represent the ecosystem, and they're already doing enterprise engagement. Now, this list doesn't yet reflect the spinouts coming from the Ethereum Foundation. I mean, there's at least 5 at core, and I think Bitcoin could play a role in granting and supporting any of those that come out.
Another key part of Lee's thesis centers around Ethereum itself. Traditionally, investors viewed Ethereum primarily as a smart contract platform, but Lee suggests it may evolve into something much larger. As tokenization expands and AI-driven transactions increase, Ethereum could become a store of value and monetary asset within digital economies. He references comparisons made by major financial institutions between Ethereum today and Amazon in its early years. During Amazon's formative period, investors struggled to understand the long-term potential of its infrastructure. The stock remained stagnant for years before ultimately becoming one of the greatest investments in history. Lee sees similarities with Ethereum. The ecosystem continues expanding. Developers continue building. Use cases continue multiplying. Yet the market may still be undervaluing its long-term significance. If Ethereum becomes the backbone of tokenization and AI-enabled commerce, the upside could be enormous.
Oil is the root driver of inflation. So if there's an inflation problem created by oil, then it means central banks have to be tight globally. And that's actually what we're saying. Oil prices have gone up. Petroleum products have been supplies and then were severely impacted. And our policymakers have to raise interest rates. So if the war ends, I think that you're going to see a collapse in oil. In fact, if any of you are technicians, you know that this is probably likely, that if the war ends, the tariff premium will come out of oil, and then at least see $40. Ethereum has huge negative correlation to oil right now. In fact, it's the highest inverse correlation ever in the history of Ethereum. So clearly, rising oil is negative for ETH price. You can see it statistically. And if you don't believe me about inflation and oil, take a look at this chart. This chart starts 1985. The top chart is the price change of oil. The bottom is mature CPI. And as you can see, every time we hit a sustained spike in oil, core CPI accelerates higher. So if this is a long war, we're going to have inflation. And in fact, the FOMC last month said the same thing. In their minutes, they said that policy firming would be appropriate if inflation were to continue and persist above 2%. So central banks don't want inflation above 2%. Oil stays high, they're going to be hawkish. However, we're betting on a war that ends soon. The second positive catalyst on the macro is the Clarity Act. It's a huge deal. We all know why Clarity Act matters. It provides a legitimate framework for crypto to proliferate in the US, but also with financial institutions to build. But unfortunately, the market only believes there's a 56% chance Clarity Act gets signed this year. Now, I've talked to a lot of folks in Washington, including our policy experts. It does seem like the odds are much higher. The prediction markets are trying to find equilibrium, but I do think probability of passage is much higher than 56%. But of course, we know that big banks don't want this to happen. But keep in mind, the big banks don't write policy. Laws are to represent people, and that's why we have to keep in mind there are a lot of constituents that want to see a Clarity Act passed. If that passes, it's a big catalyst. The third positive catalyst is, of course, don't forget the White House is a very pro-Bitcoin, pro-crypto White House. It's also very good for the US dollar policy, especially with running stable points. The fourth is we have a new Fed chair, Kevin Warsh, and Kevin Warsh is pro-Bitcoin. And finally, the stock market has a massive tailwind. I know a lot of you guys may be bearish on equities because you think they've run too far, but at Fundstrat, which is another hat I wear, we've been bullish on stocks structurally, and a lot of it has to do with this chart. This chart is the number of people in America aged 30 to 50. Every time it goes up, the US economy will grow faster than trend. And we are seeing this above trend because of millennials, Gen Z, and Gen Alpha. And as you can see on this chart, if you overlay equity returns with the number of people aged 30 to 50, the stock market has always risen parabolically. And this tells us that markets in the S&P could be 15,000 to 18,000 by the end of this decade.
Lee also discusses a structural shift occurring within the Ethereum ecosystem. In the early years, the Ethereum Foundation played a central role in coordinating development and funding innovation. However, Ethereum has now grown far beyond what any single organization can manage. The network operates across dozens of countries. Thousands of developers contribute to its ecosystem. Thousands of nodes secure the blockchain. This level of decentralization requires a new governance model. Lee believes crypto treasury companies and private sector organizations will increasingly support development, research, and ecosystem growth. Rather than relying on a single foundation, Ethereum may evolve into something more similar to mature industries such as telecommunications, semiconductors, or broadcasting, where multiple organizations collaborate to establish standards and coordinate progress. This evolution could strengthen decentralization while ensuring continued innovation.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.